to Bodacious Estate Conversations, the podcast where we skip the polite small talk and get straight to the real story about handling a loved one's property. From unexpected challenges to the messy emotions nobody warns you about, I bring you unfiltered stories, practical advice, and clever shortcuts from people who've been there and the professionals who know the way. If you want honest answers, bold strategies, and the confidence to take control, you're in the right place. Here is your host, Casey King.
Thanks for tuning in. On today's episode of Bodacious Estate Conversations, I'm joined by a guest who works every day in one of the most stressful areas families face after a loved one passes, and that's foreclosure and estate-related real estate issues. He's an associate attorney at Friedman Vartolo, where he focuses on foreclosure legislation and real estate law, supervising cases at every stage of the process, which gives him a front row seat to what actually happens behind those scary letters and notices. Let's give a warm welcome to Timothy. Tim, I am so glad you're here with us today.
Hey, thanks for having me, Casey. Glad to be here.
My pleasure. So today we're talking about the legal side of foreclosure, what families must know when an executor or power of attorney starts receiving delinquency notices or share of sale paperwork. So let's just dig right into it. Tim, when an executor receives that delinquency notice after someone passes away, what does foreclosure actually mean versus what people usually think it means?
Okay. Well, I guess the first question would be whether or not the estate has been given notice of the pending foreclosure proceedings or the fact that the lender intends on initiating foreclosure procedures. In some cases, a notice of default is required when there's a default on the loan. In many cases, it can be waived, but there are certain circumstances where what's called the Act 6 of 1974 in Pennsylvania apply. When it does apply, there are requirements that notice be given to the lenders, and if the lenders or the borrowers, apologies, and if the borrower is deceased, the lender has or servicer has an obligation to mail notices out to the known heirs or state of the. Let me see the specific language. So it would be the known heirs or personal representative. So how it works from our perspective is that we'll run title report and the servicer themselves will look into information about whether or not the borrower is deceased or not. But oftentimes an estate isn't opened up right away, as I'm sure you're familiar. And in many cases, we only know what's public information. So if an estate hasn't opened, in many cases, we will direct a notice to the property. If we know the person's deceased, for example, we'll send it to the property, and it'll be like the estate of so and so.
Yeah. So in most cases, and I'm sorry to cut you off. In my experience working with estates after somebody passes, it's typically when mortgages aren't set up for like auto payments, and they're handwriting a check every month to that mortgage. When that stops because they pass away, so nobody's writing that check anymore, that's typically what flags it. But are you saying that you would also be notified when somebody does become deceased? So that probably, let's say they just have it set up for auto payments from their bank account. You're still getting your payments regularly. The lender is. Would that trigger anything to look to see if the person has passed away or not?
There's no one specific thing, and I can't speak for each servicer of the loans and how they do their thing, but oftentimes they'll send us a referral after the loans, been 90 days delinquent or something like that, because that's when we're able to proceed against a commercial residential property. Mm-hmm. But oftentimes they may not know that the person is deceased. I might do a full investigation on the person, put together a complaint, and I'll file a complaint against the decedent, not having any idea that they're deceased. So many times we'll send it out for service. We'll mail out the notices to person A. We'll name person A as the defendant on the action because they're the person that has the mortgage. And then when we send out for service, maybe the sheriff will gather that it's the property's vacant, or there's a lot of mail in the mailbox, and we have to kind of like put together the pieces in some cases. Or sometimes the sheriff will just be, it's like a small locality and they just happen to know that so-and-so died, and they'll let us know on the service return. So there's 10 different ways that you could find out that the person's deceased. Sometimes it's before we file, and sometimes it's not.
That makes sense. So I hear sometimes people talk about pre-foreclosure. Is that before that becomes delinquent, before the 90 days? When does it go from pre-foreclosure to is that it, the 90 days?
Pre-foreclosure would, I think you could categorize it. It probably, it might differ from firm to firm or servicer to servicer, but we send what's called like pre-foreclosure default notices. So I would say the pre-foreclosure period is that time between the default and when you send notices if required, just any time before being legally permitted to file a complaint.
Yeah, that makes sense. So we're in Pennsylvania. I don't know if each state is different, but for where we are, what does the typical timeline look like when the process starts?
So it varies, of course. So I guess it depends. So like if I were to give you like an uncontested case, like a case that I file, or let me think here. I would say that the average timeline for like an uncontested case is anywhere from like 12 to 15 months from when we send notices until the sale has been complete and we have like a recorded deed from the plaintiff to the purchaser at sale.
Yeah.
But obviously that timeline can vary. It can be quicker depending on the county. There are some very efficient counties in Pennsylvania. And then it could be incredibly slow in some counties. It really depends. There's 67 different counties in Pennsylvania, and we like to joke like in the field that they all kind of work as like fiefdoms. They all kind of had their own rules and regulations and stuff within the confines of like Pennsylvania's rules. So some are more efficient, some have paper filing still, some have electronic filing. So like it really depends.
Yeah. What's the fastest you've ever seen one from start to finish?
I would say you can, there's a situation where you could probably get from complaint filing to a scheduled sale within, I don't know, like 3 or 4 months or so.
Oh, wow.
If everything falls the way it should, you get service right away. No one files an answer. You send everything the days that they're supposed to be sent. I would say like 4 months, maybe not 3 months. I'd have to really think about it.
Okay.
But yeah.
Yeah. But normally it's, we're looking at like a year.
Yeah, ish. Yeah, something like that.
Yeah.
Yeah.
You always have to add the ish there.
Yeah, exactly. I have to protect myself.
So how could folks like stop or delay the process?
So I would say that if you want to delay the process, the only way to like fully resolve the process, I think I've said to you before, like outside of the podcast, like I would say like 95% of circumstances, the bank is foreclosing is foreclosing because they need to have, the debt needs to be paid. There's a debt that needs to be paid that hasn't been getting paid. So in all of those circumstances, the best way to avoid foreclosure would be to pay the debt. To delay it, I would recommend that there's two things. First and foremost, I would recommend, not only because I'm an attorney, but just in general, like you should reach out to an attorney and get legal advice and see what the best, especially if you're in a situation where you're like the administrator or executor of an estate. Like you want to make sure you have all of your ducks in a row, and you might want to consult with legal counsel to see if it even makes sense to delay the case or what have you. But first step would be reach out to an attorney. To actually delay the actual action, I would reach out to the lender or the attorney's office handling the foreclosure. Another option, of course, is to litigate the action. So you get an attorney and you file responsive pleading. That should buy you some time. I wouldn't encourage litigating a case if there's not really merit to it, but it happens. I mean, there's defense attorneys out there that file boilerplate responses to my pleadings every single day, whether there's merit or not to it. So you could certainly retain counsel, file responsive pleading. I think more productive use of your time would be to like via the same avenues, whether you reach out to myself, like at a foreclosure firm, or if you reach out to the servicer, loss mitigation efforts would be the best way to stall. In many cases, they're willing to put like a hold on the actual action where they'll direct me like, hey, like so-and-so has reached out and we're working on like a loan modification. Can you not proceed with the foreclosure? So wherever we're at in the proceedings, if our client says to stop, then we stop. So that's another way. And of course, the final option would be, you need to explore whether or not bankruptcy makes sense for opening up for the estate. And this is, I'm looking at this through the lens of like maybe you have a client who someone has died. Like, I think that's the lens that we're looking at this through.
Right.
So that would be my advice with that question.
Yep. Yeah, I've also got the sheriff's sale delayed anyway, just by having a listing agreement. Like, hey, we're going to put it on the market. Yep. We're going to try to sell it. And typically the lenders are like, thank goodness, like, please get this sold, because they don't want to, have to.
Yeah, that's 100%. That's one that I didn't really think. I was thinking more of like once the complaint is filed, before, like, I guess I was thinking through the lens of like pre-judgment, before judgment has been entered. After judgment has been entered, and even pre-judgment, yes, certainly that's something that I see a lot of times where a real estate agent or a broker is kind of in the middle and trying to get this, the person knows that they're underwater, they're trying to get rid of the property, and they get a sale scheduled. That's another way to avoid it, or to buy yourself some time. A lot of, if we have a sale date scheduled for next month or something, and you reach out to me and say, you're going to sell this next week, and we postpone, like, it's easy for me to explain to my client that we should probably postpone like a month or so.
So if, let's say, we have a sheriff's sale scheduled on a property a couple months out and we get an offer, but it would have to be a short sale because the offer is not enough to satisfy the loan, would the lender be willing to negotiate that short sale versus going to the sheriff's sale? Like, where are the pros and cons from their perspective?
Well, I think that's, not to give you kind of like a catch-all answer, or like an it depends answer sort of thing, but it really does depend. It depends on the lender and what their preferences are and what their guidelines are. But in many cases, like, if you have enough, if you're going to sell the property and it has enough money to cover the debt, then of course, like, there's nothing we can do. You proceed with the sale of the property, and the mortgagee gets paid, and that's that, and our action is over. If there's a situation with a short sale, like, the lender doesn't necessarily have to accept that, because they could bank on getting all of their money back by proceeding to sheriff's sale. And the other benefit of proceeding to sheriff's sale from the plaintiff's perspective, or from the mortgagee's perspective, is that it does ensure like clear title, whereas the short sale may not necessarily have those same guarantees. Although I know that you do run title behind the scenes and stuff like that. But yeah, that would be my answer to that. It really depends. It's worth exploring the option. I would certainly check with the bank first before going through the effort, though.
For sure. Yeah. So you mentioned earlier that it might not be worth trying to delay and maybe just letting it run its course. What type of scenarios could you think of that an executor or power of attorney would be in where it just probably doesn't make sense to try to intervene?
I mean, I think the most common example that I encounter is that you have, 5 siblings. None of them want anything to do with the property. One of the siblings opened up an estate just because that was what they were told to do. And they want to make sure that everything's okay. And then after they do their due diligence, they realize that they're inheriting a property with that's underwater or something. It depends. There are so many different variables, but like, maybe there are other loans tied to the properties, or just, I'm trying to think of other scenarios here, but in general, I would say that they just want nothing to do with the property. There's no benefit to them saving the property. It causes more good or bad than it does good. And in some cases, it may make sense to just wash your hands of it. there are certain things that I can do as an attorney too. Like I can release these people from an action, or they could stay on the action. It really doesn't matter. I think the most important thing that I would explain to heirs that comes up all the time is that just because you're named in an action doesn't necessarily mean like you may be named in the foreclosure action, but we're not going after you for personal liability. It's more you're named in the action so that we are able to. My main job is to convey clear title at the end of the sheriff's sale. So in order to convey clear title, I need to name anyone who may have an interest in the property to have that work, if that makes sense.
It does, yeah.
Okay.
So earlier you said 99% of the time, the reason for the foreclosure is due to insufficient, I always said insufficient funds, but delinquency in payments.
More or less, yeah.
Yeah. So what's that 1%?
1%, I can think of like one case, I guess, off the top of my head. It's very infrequent, but there are other terms in the mortgage that if someone violates those terms, they're in breach of, they're more or less in breach of the contract of the mortgage, and you could initiate a foreclosure action. So that's a roundabout way of answering your question. But I have a case, for example, where someone there was a fire at the property, and they went through insurance and got the insurance proceeds, but then did not do anything to repair the property. They stole the proceeds from the insurance claim. So we had a basis for, in this particular circumstance, we had a basis for filing against them for non-payment of the mortgage already. So it wasn't like this was the only reason, but there was a second reason for the default, was that there was a violation of something in there, like they need to keep the property preservation. They need to make sure that they're making sure that they need to make sure that they're taking care of the property and that it's not in disrepair or completely burned down. Right. So in this circumstance, the guy did all the stuff behind the. For example, if you have a fire, you do have, in many mortgages, you have a requirement to alert the mortgagee of the fire right away. So just failure to notify could be grounds for foreclosure. So
well, that's interesting. I didn't realize that you had to notify them of the fire. Interesting. So, okay. So other clauses that I can think of just from sitting in on closings and settlements and listening to the representative go through everything that's in that huge packet that buyers have to sign. I can also think of due on sale clause. So if the property or the mortgage is in your name, and then at some point down the line, you transfer the title to, let's say, like an entity, could that trigger a due on sale clause?
It could in theory, but I've never seen it. And quite frankly, oftentimes I don't see the banks having too much of an issue. I've never had someone refer a case to me because the person A conveyed the property to person B. All they care about is that their mortgage is getting paid. So if I convey the property to person B and either I continue to pay the mortgage or that person starts making the payments, I just don't think they really pick up on that, or they don't care as long as the bill's getting paid. You know what I mean?
Yeah, that makes sense. I'm getting my money. I'm good.
Yeah.
Whatever you guys are doing.
That's why I'd say like these issues probably exist all over the place, but the bank really, the only thing that triggers the bank to file for foreclosure is non-payment. And even in that example that I gave you with the fire, like the bill wasn't getting paid. That's why they ended up deciding to foreclose. And I think they discovered that issue later. So.
Yeah, that's interesting. So could you give an example where notice of default was given and there were tenants in place? What happens to the tenants? What rights do they have?
So the tenants still have like the tenants' rights. So nothing with our, like, I don't want to misspeak this or boil it down or oversimplify it. But essentially, like, the tenants really can't do anything to prevent the foreclosure. They're not the ones who own the property. The foreclosure is filed against, in Pennsylvania, we're required to file against the mortgagor and the owner. So those are the people that are going to be named in the action. And the tenants don't really have any rights other than their property rights vis-a-vis like their tenant rights. So you're not really going to have to deal with tenants until after the property has been sold and goes to a new owner. And that's when the issues with tenants being there actually becomes an issue for the new owner.
Oh, I didn't realize. So it would go to sheriff's sale with tenants in place.
Exactly.
Yep.
Because the sheriff's sale isn't like, there's a difference. Like you have your sheriff's sale and then you have like a lockout. Like those are two different things. The sheriff's sale is basically the sheriff holding an auction to see who owns the property. And then when you're dealing with like, it doesn't change anything. That tenant may still have their right to live there based on the lease agreement that exists.
Right.
So yeah, so I would say in my experience, we don't deal with tenants until after the foreclosure action has concluded. And normally, from my perspective as like a plaintiff's attorney, we'll have the bank files against person A. We enter judgment. We go to sale. The property sells back to the bank, and then the bank has now owns a property with tenants in it. That's the normal situation that I encounter.
I see. So from the tenant's perspective, then when it changes ownership to the bank or wherever it goes next, where do their payments go? How does it get coordinated? Where the monthly rent goes?
It's going to depend, I think. I don't deal with who they make their payments to, but my advice to them would be to get in touch with the new owner, because the expectation would be that they're supposed to pay the new owner now.
Yeah.
They shouldn't be making payments to the old owner. But the best advice I can give, which is kind of like that catch-all, is to reach out to an attorney and have the attorney, because it's gonna depend on the circumstances.
Right.
Oftentimes so like how Pennsylvania differs from other states is that you do what's called an ejectment action. It is an eviction, but if you have someone living at the property, I'm trying to think of a way to explain this the easiest. Most oftentimes, if we're foreclosing on someone who's alive, they might end up being the person who needs to be evicted. So like we go through the whole foreclosure process. They no longer own the house, but they live there. And there's no mechanism for us to tell them to get out other than to file the ejectment action after the foreclosure.
I see.
So you file an ejectment action. It's not like your traditional landlord-tenant action. It takes like 3 to 6 months in and of itself. You need to be the owner to file that action.
So then what about squatters? So somebody that's in the property that's not paying anyone, can the new owner just like do a lockout like you were talking about earlier?
Yeah, so squatter is like the most common situation that we'll encounter, because oftentimes someone owns the property and it's their property. And then once we go to foreclosure sale, we now own the property and we have someone living there that shouldn't. It's not your traditional like landlord-tenant relationship where there's like a lease. So
Right.
in Pennsylvania, in order to get rid of a squatter or like a holdover tenant or whatever you're going to name that person, you need to file an ejectment action. How that process works is oftentimes, I don't think there's a requirement, but oftentimes you'll give them notice. Like, hey, we own the property now. We understand that you live here. We're going to give you 20 days to leave before we proceed with filing an action. That's sort of like best practice, just to give them a heads up. And so when you do file an action in court, you don't look like the big mean bank. Like you've given them a chance to get out. Right. And whether or not it was required or not, we gave them a notice. You know what I mean? And then at that point, you have to file in the court of common pleas. You file an ejectment action, and that takes anywhere from 3 to 6 months. What was your specific question? What to do if you have a squatter?
Yeah, I'm just curious from the lender's perspective. So in this case, the heirs were made aware of this property that's in default, and there's somebody in place that's not currently paying on it. They decide to bow out and let it go to sheriff's sale. Now the lender takes over. I was just curious, like what they do in those situations. But I think you explained it pretty well.
Yeah, so that would be the process, like what I went over. I just wanted to make sure I didn't like miss your question somewhere in there.
Yeah, you got it. You're good. So Tim, earlier we were talking about what possible other options there could be for somebody. What could you kind of give us some bullet points of what that might look like?
Yeah, so in many situations, like I said, it makes sense to reach out to an attorney to for where you have an estate with like an underwater home, it might make sense to reach out to an attorney to see if bankruptcy or some of these other options that I've gone through might make the most sense. I've also alluded to like basically doing nothing, or like there are situations where there's like a graceful exit, and there's a couple things you can do there. With again, the caveat is I would suggest to reach out to an attorney and not to do this by yourself.
Sure.
But you can explore options of like deed in lieu of foreclosure. Many times a bank might be willing to convey or just, do a deed in lieu of foreclosure to avoid the foreclosure process. The pros for the bank is that it's less costly and they can get the property back sooner. The downside from the bank's perspective, as I kind of explained earlier, is that the benefit of a foreclosure action is that it clears everything. It divests all of the other liens and interests that are tied to the property below it. So it might make sense for them to proceed with the sheriff's sale for that reason. And then, like I said, after consulting with someone, maybe you just do nothing and let it run its course. Let the property sell back to someone else and just wash your hands of it. And then one final consideration is this is a little different, but you were asking me about what to do with squatters. And I know this is like a little different than the question you just asked me, but it's something that I just thought of that I think would be helpful is if you do have a squatter at the property and you're trying to get them out without going like the ejectment action that I was explaining before, or like the, like landlord tenant, like eviction, it makes a lot of sense to approach them and see if they'd be agreeable to like some sort of cash for keys arrangement.
Yeah. That's a good idea.
It's risky. But oftentimes if it's a matter of like, I can pay you $5,000 for you to give me the keys and get out of the house, then in many cases I've done that. You want certain assurances, and you want to make sure that you have like a good agreement in place and stuff, and that you're not giving them the money before you have possession of the property, stuff like that. But that's often a good route to go as well, to save yourself litigation and attorney's fees and all that stuff.
Yeah, that's a good call. Cash for keys. Okay. Well, Tim, before we wrap up, I would like to kind of zoom out for a minute. We talked a lot about the legal side and everything that goes along with foreclosure, but I'd love for our listeners to understand you a little bit more. Can you tell us a little bit about your background, where you grew up?
All right. So I'm based out of Warminster, Pennsylvania, which is in Bucks County. I went to Kutztown University. I majored in history, political science, or minored in political science there. I then went to Florida for law school. I went down to Orlando and went to Barry University.
Oh, nice.
I then moved back. I missed my family, so I moved back home. I took the Pennsylvania bar, and I've been practicing since 2018 in Pennsylvania. That's pretty much it professionally. I did like landlord tenant stuff. I do, I obviously mostly what I do right now is foreclosure work, but like the creditors' rights and stuff like that. Outside of work, I am pretty big into Philadelphia sports. I like the Flyers, the Sixers, the Phillies, the Eagles. I watch every game that I can as far as that goes. I like to stay active for the most part. I have a 2-year-old, so I don't stay as active as I used to, and I have I also have a baby on the way due in the end of February. So
congratulations!
Yeah, thank you very much.
Yeah, it's going to be a Pisces.
Yeah. So we're looking forward to that. We're just getting everything ready.
Nice. And, do you know if it's a boy or a girl yet?
We're not finding out this time. So
okay, surprise.
So, yeah.
Very cool. Congratulations. That's awesome.
Yeah, thank you. Outside of that, nothing crazy. I'm into astronomy and some other interests that I have on the side.
That's a new one. So not a whole lot of people are just into astronomy. So tell me about that. How did you get into that?
I've just always been interested. I've always, you know, when I was younger, I always liked looking up and finding stuff. And I think when I started to find that there were planets out there and stuff that you could see with the naked eye, I'm always just like kind of a dork, like looking up and trying to find them and stuff. It's funny because everyone in my family knows that I know this stuff. So like I'll get my parents will be on vacation somewhere and I'll get like a screenshot from them like, hey, what's this? It's just like a picture of the moon with like a dot under it. But yeah, so I was always into it. And then my last semester at Kutztown, they have like an observatory there, and I took an astronomy class, and I think I only had like 2 or 3 classes I needed to take my last semester, so I was able to like really focus on it and like have a lot of fun with the class, and I felt like I learned a lot, and just stuff that you learn and you don't forget type of things, you know?
Yeah.
So I have a telescope. I use it every once in a while, not as much as you think. It's kind of like owning like a pool table. You know what I mean?
Mm-hmm.
Like you think you're going to use it but like if friends aren't around, you're not really using it, you know? So
yeah, I get that.
Yeah. So, but yeah, that's kind of one of my interests on the side.
That's pretty cool. So, I mean, you deal with a lot of high stress situations during your working hours. So what do you do to unwind?
Oh man, I don't bring work home with me. That's one thing.
Good for you.
Yeah. So I'm at the firm that I'm currently at. You don't bring a lot of work home with you. There's a nice work life balance. I know it's like kind of like a cliche, but I would say if I don't have anything crazy going on and it's 5 o'clock, I am usually pretty good to be able to log off and just worry about everything tomorrow. Now, I still will manage it and look at it and stuff, but I think it makes it easy that my job doesn't come home with me for the most part.
Yeah, good for you. That's awesome. So what drew you into wanting to be an attorney?
I've thought about it myself before, and I don't know that I can like pinpoint on that specific answer, but I think like where it drew from is that I was always like really into history. As you like my majors kind of speak for themselves, kind of like speak for the development of it or like speak for themselves. But like I majored in history because I really enjoyed reading and learning about like how things happened and why they happened. And you know, history's like they go hand in hand. Like anything that happened in history is because of like what was happening with the law or the nation or the country or something like that. So then naturally, like I got drawn to political science, which led to me minoring in political science, which it's the same thing. You're learning about a history, but you're learning about it in more of like a political lens, I guess. And I don't know. I felt like I understood what was going on, and I wanted to be a part of being able to read. And I'm trying to think of how to explain it, but you know, being able to understand the laws and explain them to other people and help people navigate legal issues just through history and political science made me interested in doing that.
I get that. So you said you're not as active now that you have a 2-year-old and a baby on the way, but when you were active, what did you like to do? Were you a runner or a biker?
I tried to run. I feel like I would run and get to a good spot, and then I always end up with like a nick or something and a minor setback. But mostly I like lifting, working out, and I liked playing hockey. I used to play like organized hockey. I don't anymore. I'm too afraid to get hurt now. So
yeah, I wanted to get my son into hockey when he was younger. Luckily, that didn't actually come to fruition. That's an expensive sport.
Yeah, it is. Yeah, well, when you get to like this age too, if you're playing with a mix of people who are just out of college and people your age, and it's like I don't feel like getting injured by the person that just got out of college and still is still very active. You know what I mean? And doesn't have like an office job to walk into the next day.
Right.
Eye. Something like that. Yeah.
Black eye, bloody nose, missing teeth.
Yeah, exactly.
Yeah. Oh, that's funny. Okay. Well, is there anything that still surprises you today? You know, when any cases that come across your desk that you're just like, really? That's new.
Nothing too crazy. The area of law that I practice in isn't like, I wouldn't say it's like the most exciting stuff that pops through my desk every day. It's mostly just like reading through deeds and mortgages and stuff. There's certainly stuff that does happen in dealing with defendants and stuff that can be add some extra zest to my day, so to speak, but nothing crazy. Nothing crazy, to be honest with you.
Fair enough. If there's one thing you wish every executor or power of attorney understood before they ever opened a foreclosure notice, what do you think that would be?
I would think that the simplest way to boil it down would be that communication is basically the biggest key. If you're an administrator or an executor and you're looking to deal with what's going on with a pending foreclosure, or you got to notice that foreclosure might be in the works, I would think that the most important thing for them to know is that that it's important for them to communicate with the lender or the attorney on the other side to communicate what their intentions are, whether that be saving the property or walking away for it, or whatever their position might be, because it'll just make it easier for everyone involved.
Yeah, I mean, sometimes that is the best case scenario. Doing a graceful exit, I think is what you called it.
Yeah, exactly.
Yeah. Yep. Yeah, could be less frustration for sure going that route.
Yeah, if everyone has the same expectations from the get-go, it makes it a lot easier to just like know that I'm not going to be dealing with opposition, that they're not going to be dealing with any obligations on their part, or whatever the situation might be.
Perfect. Okay. So Tim, if anybody wanted to reach out to you directly to get more information or just network with you in general, where could they find you?
So I'll provide my email address. It's Cirino. So it's my first initial T and then my last name, Cirino, at friedmanvartolo.com. Spelled FriedmanVartolo.com. If anybody had any questions or anything, or wanted to reach out to me directly for any reason, can't guarantee that I can help, but I'm more than happy to be a resource for anybody, and anything like that. So.
Oh, that's so awesome. Thank you, Tim.
Yeah, of course.
So, I mean, this has been so incredibly helpful. I really appreciate you breaking all of that down, kind of everything that causes fear and confusion with families. It can be pretty overwhelming for folks. So I feel like this was really helpful. Absolutely.
Well, I appreciate you having me on. It was great to hear from you and great to talk to you about this stuff.
Yeah, that's truly my pleasure. I appreciate you coming. Well, that wraps up another episode of Bodacious Estate Conversations. Thanks for listening, and we'll be back with more great stories and tips soon. Bye.
Bodacious Estate Conversations isn't just chatter. It's about learning, taking action, and finding solutions that actually work. If today's episode resonated, share your thoughts, subscribe, leave a review, and pass it along to someone who could use a hand. More stories, smart strategies, and practical guidance are coming in the next episode. Don't miss it.